Hi, welcome back to O Business Consultant. Today we are back with a new Excel model related to recreation center businesses. In order to review this template, we are going to go through these 10 different sheets. But before we review this model, you must note that these P cells are representing the assumption cells and the gray cells are representing the linked cells. Starting off with the first sheet assumptions, here we have included the major assumptions of the business. Now these assumptions include your investment assumptions, loan, capital expenditure, operating expenses, payroll, revenue assumptions, as well as cost assumptions. Moving on to the next sheet, inventory analysis. Here we have calculated the closing inventory figures both in units and in dollars for the business. In the next sheet, revenue analysis. Here first we have calculated the total memberships of the business for each month, and then we have calculated the total revenue arising from each revenue stream, and then a total revenue figure for each month. Now please note that this is a 5-year projection model, so the total number of months in this business is 60. Then we have the cost of goods sold sheet. Here we have calculated the cost of goods sold arising from each revenue incurred on each revenue stream, and then we have calculated the total figure at the end for each month. In the supporting details sheet, we have included the major operating expenses of the business. This includes the fixed and variable operating expenses. Then we have the payroll, depreciation, loan amortization schedule. We have calculated the loan payments, the interest payments and the principal payments. And then lastly, working capital analysis, where we have calculated the account receivable, accounts payable, and inventory figures for each month. Then we have the website marketing expenditure. Here we have calculated the total website marketing cost for each year and then for each month as well. In the financial statements, this is a 5-year projection financial statement. And now we have included three major financial statements. That is the income statement, which shows the financial performance of the business, the cash flow, which shows the net cash increase or decrease for each year and for each month, and then we have balance sheet, which shows the financial position of the business. Moving on to the next sheet, startup summary. Here we have compared the total funding and total expenses of the business, and then we have included graphs for easy analysis as well. In this sheet, we have also included the funds utilization summary. In the financial analysis sheet, we have included the major company analysis. This includes the break-even analysis, where we have calculated the break-even sales point for each year. Then we have financial ratios, where we have included the major financial ratios of the business, such as solvency, liquidity, profitability ratios. Then we have company valuation, where we have calculated NPV, IRR, and payback period of the company. We've also calculated the return on investment. Lastly, the sensitivity analysis. Here we have included sensitivity analysis for both pessimistic and optimistic cases. The last sheet is the dashboard. Here we have included graphs to represent the major financials of the business that we have calculated in the previous sheets. Now this includes your profitability in dollars, profitability in ratios, we have break-even sales graph, then we have department-wise distribution of operating expenses, your total assets versus total liabilities, and much more. We have also included a scorecard to represent to highlight the major financials of the business. That's it from today. Thank you so much for your time.